And my next guest remains bullish on the stock from here. Joining us is Dan Niles, the founder and portfolio manager at Niles Investment Management. Dan, it's been a while. It's good to see you. I half expected you to be shorting this name because I feel like sometimes that's your style, to come in when the consensus is firmly on one side of the boat. Although, tell me what you think of Nvidia's journey here. This was a company that 2 years ago was only worth $1 trillion for the first time. Last year, $2 trillion, then $3 trillion, and now here we are at $4 trillion.
Well, I mean, for me, I never short stocks that are consensus. It's if I think the fundamentals are turning and you potentially have a problem. And that's why, if you think about middle of last year, I said, look, I think we're going to have an issue, AI digestion. And if you remember, Microsoft, Amazon, and Google, the three hyperscalers, came out and reported the June quarter of a year ago, and all three revenue estimates went down for the September quarter. All those three hyperscalers reported in the December quarter, and these are obviously the biggest customers of Nvidia, and all three of those estimates went down for revenues for the March quarter. And the reason is you had an issue where if you're training on all the data on the internet, which is what you were doing by the middle of last year, there's no more data to train on other than the stuff that comes on a daily basis. And so you went through this slowdown in there. And if you look at Nvidia stock, it went down 49% from intraday high to intraday low. Then you had the big write-off, which ultimately ended up being $4.5 billion.
That was China in the first quarter. I just want to make sure, take people back to that. Going into Nvidia's earnings announcement, there was all of this concern about what potential export controls were going to mean for the business, export controls to China. They came in, they had a big write-down, in some ways even bigger, I think, than people were expecting. But you say it was important that they got the number out and got that behind them.
Yeah, and that's when we turned bullish, because we put out a note in early May talking about, actually I think it was late April after that write-down, saying, look, this is great because it de-risks the numbers. The write-down originally started at $5.5 billion. Analysts had to cut the numbers, take China out of the estimates. But also at the same time, so training spending is slowing down, but you finally had inference spending picking up. And so that means people are going to ChatGPT, OpenAI, Gemini, which is the one I use a lot. I probably use it 10 to 20 times a day. And you had inference demand really start to take off. Google talked about the fact that in the month of May, the tokens that they were generating were up 50 times year over year. And then Microsoft, which obviously was invested in OpenAI back in 2019, before any of us had even heard of ChatGPT in 2022, they came out and said, hey, we have a 5x increase in the number of tokens we're generating. And so you put all that together, companies forecast de-risk because of that massive write-down, some of the sovereign AI demand as President Trump went to the Middle East and you had all these deals, all of that stuff. And you have a 40 multiple, which if you look at some of these other Mag 7 names, you go, that's not unreasonable for a company that's growing revenues probably for the next several years. They can probably grow it at about 20%.
Right.